So it worked. Nice.
You guys all good? All right. Good morning, everybody. We got day 2, TokenizeThis 2024. Thanks for everyone's attention. Everything was good. Yesterday was awesome. Looking forward to following it up today. TokenizeThis Fireside Chat was great. Project Guardian was awesome. We're going to supplement that a bit more right now. We got the Digital Asset Infrastructure panel. I'm Peter Gaffney, head of research at Security Token Advisors, which is actually our own consulting and advisory arm. And here I'm joined by Jason Emory of DTCC Digital Assets, Patrick Martinez of Northern Trust. We got Lorenzo Rigatti of BlockInvest, and we have Mike Reed of Franklin Templeton on the end. Guys, if you just want to go down, Jason, and start, give a little intro about yourself, we'll dive into the firms a bit more.
Yeah, my name is Jason, and I joined DTCC just back in December as part of the acquisition of Securency. Prior to joining DTCC, I was the chief product officer at Securency for a couple of years, and before that, I was spent most of my career in the technology industry, specifically in telecom. I should talk to Carlos, so have had experience in product management, engineering, development, marketing, and that sort of thing. And today, I run the product team at DTCC Digital Assets.
Nice to meet everyone. I love the chairs. Super comfortable, so thank you for that.
We're never leaving.
Yeah. Patrick Martinez. I sit on the Digital Asset and Financial Markets Group for Northern Trust, based here in Chicago, and lead the strategy and innovation work for the bank in region. If you're not familiar with NT, it's a large global custodian. So we're responsible for roughly 16 trillion in client assets. We sit in over roughly 100 markets globally. And the team's mandate is pretty simple. It's to, one, disintermediate ourselves from within, and then two, look for new opportunities to drive revenue and growth. And the backdrop of that is obviously leveraging blockchain technology to kind of bring new products to market, provide safe market access and safekeeping among a number of other asset services. So nice to be here today. Thanks for the invite and looking forward to the conversation.
Lorenzo Rigatti from Italy, Milan. I mean, long trip, but it's worth it. Yeah, the funny thing is that I used to work as an engineer, okay, in cruise construction, but thanks to a guy from Miami, I discovered Bitcoin. I was kind of obliged to buy Bitcoin back in 2015. So, I mean, I was lucky enough to being able to quit my job and start working on the crypto space, before in Switzerland in Crypto Valley, where everything started. And then I founded BlockInvest 4.5 years ago. And we are, I mean, the leading tokenization provider in Italy. And here we are.
And I'm Mike Reed. I work at Franklin Templeton Investments in the digital asset unit. We've been engaged in blockchain builders, investors for years now, since about 2017 or 2018. Can't remember exactly. And I'll get into some of the initiatives we've been working on. I lead partnership development, where basically we go out and try and find people who are doing interesting things and see if we can do interesting things together. Sometimes it takes the form of us investing in them, sometimes them investing in us, sometimes technological partnerships. It really runs the gamut. And I would like to second the chair comment. There was a lot of pre-game anxiety about getting in and out of these chairs. I'm a heavy-set person, and I'm really thrilled to be able to sit in it and feel comfortable. So thank you, Peter.
I love it. That's the
awesome.
key right there. Awesome, guys. Thanks so much for the intros here. Listen, this is about infrastructure. And usually when I think infrastructure, I'm thinking like, okay, an issuance platform, a blockchain itself, could be a marketplace. But also in this space, given kind of the precedent that has to be set, you could even look at different proof of concepts and products as infrastructure themselves. Like a ETF wrapper is a great piece of infrastructure, in my opinion, for new assets. So Mike, I actually want to throw it back down your way, looking at the Franklin U.S. On-Chain Government Money Fund. I know that was incepted back in, I think, April 2021 officially, obviously a hot topic the past 1.5 years. That is infrastructure to me as kind of a precedent-setting product. If there's anything you want to share about that and kind of how it came to be.
Yeah, thank you. We're really proud of it. Someone yesterday said nobody has put a public security on chain for U.S. investors yet, and I kind of took issue with it because we have. We've done that. We took a fund called the Franklin On-Chain U.S. Government Money Fund, which is a SEC registered 2A7 government money fund, very traditional fund wrapper. And the way that, excuse me, the way that you buy that product is either through our app, which you can download at the Apple App Store or Google Play, or through an institutional interface. And investors can buy a token we call Benji, and one Benji token is equivalent to 1 share of the Franklin On-Chain U.S. Government Money Fund. And that fund pays interest daily. It comes to you in the form of an airdrop of new tokens into your wallet every night, overnight. We built the wallet infrastructure ourselves. We built the on-chain transfer agent ourselves. And then maybe the thing that I'm really excited about, which I say often, is that our minimum, it's not for qualified investors, our minimum is $20. So it's very accessible to everyday investors. It's a real nice entryway for them to be able to gain access to on-chain assets. It's a way to legally earn yield on-chain. So we're thrilled about it. And our whole, did you want me to talk about like why and how and all that kind of stuff? Okay. So the kind of why and how, embarrassingly, this whole project came to us really more as a thought exercise where we were learning a lot about blockchain technology and how it worked, and we thought about trying to find efficiencies within our own business. And so when we started deving the project, yields were at 0. There was really no interest in money funds at all. We did it really, like I said, as a thought exercise. And so we started building. We built initially on Stellar as our blockchain. We're now live on Polygon as well, and have filed to dev on more chains. But we learned a lot of things out of that initial build that really helped to propel our digital asset business going forward. So what started as a thought exercise really blossomed into a whole array of opportunities. For example, we learned, and this is probably evident to everybody in the room, but at the time it wasn't necessarily evident to us as we began learning and began our journey in the space, all the chains are different. They offer different communities, they offer different cost structures, they're all very unique. And so picking chains on which you develop is really important, and that came apparent to us before we had even chosen what chain to develop on as we examined all the landscape out there. Another thing that was really interesting to us was the cost structure piece of it, where we could really crush our transfer agent costs and remove, almost, make that function relatively cost effective for our clients and be able to pass that benefit through to our end clients. So the Benji product actually pays more and charges less than the other money funds offered by the Franklin complex. So we're really excited about that. Then we started to learn that not only are all the chains different, but there's all these tokens out there, and they're all different. They all represent different projects and protocols, and some of them have, only governance, a governance quality to them. Some of them have real tokenomics to them, real economic feedback to the token holders. Again, this is all evident to everyone in the room, but as you're in your early stages of your journey, remember with me, you start to look at this stuff and you're like, wow, this is all pretty amazing and expansive. And so out of that, when we start to hear about different economic structures, different, how things have different values, we started to wonder about putting price targets on them. And so we began to build an investment strategies unit. We offer a few of our investment strategies publicly in SMA form through Eaglebrook Advisors, where we offer multi-coin portfolios to retail investors. We also have a VC unit as part of our investment strategies unit. So that became this whole learnings that came out of all, just what started as this thought exercise. We started to figure out, oh, chains matter, tokens matter, portfolios of tokens matter, offering active advice on those matters, all that kind of stuff. And then the last thing I'll mention, sorry, I know I've been talking for a while now. The last thing I'll mention is we also operate validator nodes on multiple chains as well. And to us, we really have this belief that you have to be part of the network to understand the network. So we were one of the groups that you mentioned the ETF structure. So we were one of the groups approved to be able to launch an ETF structure earlier this year. We launched a product called EasyBC, which is our Bitcoin ETF. It's not a cash grab for us. It's not a land grab. We're really thinking about this as a holistic way to approach this, this total space. So we have a real comprehensive way of thinking about it across the board.
I love it. Great breakdown. And not to give you a rest just yet, but I believe Benji announced peer-to-peer transfers recently as well.
Oh yeah,
right,
yeah,
on that side?
yeah. Thank you.
So what's the final vision there? Like,
Thank
is
you.
it, it's all within the app itself. We were talking about ecosystem interaction in a previous panel. Anything to
It's
check on
like
that?
it's like being on a podcast and someone saying, "Don't you have a movie to promote?" Thank you for that. So yeah, we announced peer-to-peer transfer ability in Benji, and it's so funny. I think last week we announced that, right, Rick? Last week, Okay, thank you. My colleague Rick Golubov in the audience. And so we're super excited about that because, about a week prior, I read this article about somebody talking about how account-to-account transfer was the future, and we're still such a long ways out for it, and nobody's going to be able to do it for years and years and years. We've done it. We've done it. Now, as a Benji holder, you can transfer your Benji tokens to someone else, and I'll give you a very specific use case for that. You could pay your vendors in Benji. You could hold Benji as part of your treasury and allocate it however you want. We just think about all the use cases. And one interesting use case was a VC client of ours talked to us about how he was really excited to fund his portfolio companies in Benji tokens. And he said, he's like, usually what I do is I sell out of a money fund, I transfer the cash over, and then I hope that the portfolio company invests the cash in a money fund. He said they don't always do that, but that's kind of what I'm hoping for. And that whole process takes 3 to 5 business days. The cash is doing nothing. It's earning yield for nobody. Well, the bank, but it's not earning yield for the portfolio company or for the VC themselves. So he's really excited to be able to instantly transfer a yield-bearing asset. He's giving a portfolio company something he wants them to hold in their treasury. And not only that, but then it's sitting in a wallet, and you can see how the spend down works. You can see how the burn rate works of the token in the wallet. So it's this really interesting thing that we've been able to unlock for our investors, and we're super excited about it. Thanks for bringing that up, Peter.
And of course, and Mike, out of curiosity, what is this all through the Benji Investments app? So look, if a landlord was onboarded, theoretically he could have tenants pay him in Benji all through that app?
That's the idea, yeah. So you could think of it as an alternative payment effort. We go out for dinner. I want to pay for my half. I can pay you in Benji tokens. So we're unlocking new feature sets, new capabilities for our product all the time, and we're super excited about the future.
Beautiful, awesome stuff there on the infrastructure side. Patrick, I want to look at Northern Trust next. You guys are a tremendous custodian. You have an asset management arm. You're already connected with bond blocks over in Singapore, I know, on the fractional bond side. I always thought that was a very cool case. How should we think of you? How should the audience look at Northern Trust right now to kind of work with you on the digital asset side?
Thanks for that. And Mike, that was really well said. I'm rarely am I speechless, but you told a very succinct digital asset story, I think, for large institutions. And so I echo most of, if not everything you've said. And I think from a Northern Trust perspective, again, as a global custodian, we have one primary responsibility downstream from everything that Mike's discussing, and that's safety and security. And so when the buy side or an end investor wants to purchase, it doesn't matter if it's a traditional or digital asset, they rely on their custodian to ensure that nothing happens with that asset. It can't be stolen, it can't get lost, there's an active record of it, and that they can transact in the capital markets in an efficient manner. And so from an infrastructure perspective, we very much think of ourselves as almost a middle layer to how investors access the capital markets. And so that can take a lot of different forms. I mentioned in my intro that we sit in over 100 markets globally. Well, we have a massive, what we call our network management arm, which sits in region in one form or fashion to ensure that if a client is investing in the US or they're investing in Nigeria or in APAC, that they can do so in a safe and efficient manner. And so that requires a lot of due diligence with the local depositories in region, the central banks. We try to understand rules and regulations, kind of package all that up and give our clients the comfort that they can invest in that region. And so the digital asset lens to that is very, I think, complementary. We look at these new and emerging ecosystems as just that, almost new marketplaces, new jurisdictions for us. And so we are taking that historical lens that we've always applied to financial markets and applying that now to blockchain and enabling that safe and secure access. And so from a product perspective, the group's been around since 2017, and the very first thing we launched was a tokenized private equity platform. And so what we did is we converted GP and LP agreements into smart contracts that manage the entire life cycle of a private equity fund. We ultimately sold or licensed that product to Broadridge in 2017. So since then, we've been engaged in Singapore in bond blocks, which is tokenized fixed income assets. Northern Trust provides the custody of the underlying bond, and then that is in partnership with Citi. And in that exchange, we announced late last year the Northern Trust MVP carbon offset platform. So taking carbon offsets, tokenizing them, putting them onto a DLT blockchain, and we're allowing institutional buyers and high-quality project developers to transact in tokenized carbon offsets. Obviously, as a custodian, you can imagine that we are heavily involved in the digital asset custody side of this, and we're really excited about a lot of the work we're doing, especially in the United States, around custody for digital securities. We've been on that journey for a bit now. The transfer agency piece is obviously a big part of the conversation. But then obviously opening up the secondaries, I think, is kind of the next step for us. It's one thing to put something on chain. It's one thing to natively issue a security. But clients immediately start asking us, what do I do with it? Why is this beneficial to me? And the money market conversation, I think, is really fascinating. There's so many use cases for it. What happens if interest rates, knock on wood, go down? Does that make the money market fund conversation more or less appealing relative to cash? And so we're really just trying to make sure that, again, we cover the entire ecosystem. We look at this sort of integrated approach to financial markets, all with that ethos of making sure our clients can access those markets in a safe and secure way.
I did not know about the GPLP tokenization back in the day. I was just talking about that yesterday. Here, we'll have to pick that up later. You mentioned the integration side, like the custodian. They're managing, they're holding the cash. They have the money there. I think what's a big limiting factor right now in the tokenization space is that the custodians that are playing ball with a lot of the service providers we've been seeing the last couple days, all also startup custodians, all building their book of business. Like you guys, other tremendously large custodians on the legacy side kind of hold those keys to really unlock meaningful capital. Is there anything you could talk about on the integration side, whether you're working with other startup tokenization platforms, doing things in-house? I know some things you want to kind of keep to yourself, but like anything on the integration side we should think about, because that's really where I think a lot of our audience interest is going to lie.
It's a fantastic question. I don't know if I have a great answer for it. I'll throw out maybe just a couple of anecdotes. So number one, being a large financial institution is both a blessing and a curse. So on one hand, you're correct, we have significant distribution. If you are a large asset owner or a large asset manager globally, there's basically a 1 in 3 chance you're already an NT client. Our thesis is that between 5 and 10% of our client assets will be digitalized by 2030. And so at a place like Northern, if you apply those numbers, you're talking about somewhere between $800 billion and $1.6 trillion in assets here in the next couple of years. So it's significant. And that's just at Northern. You start applying that to State Street, Boney, JP, et cetera. The numbers get pretty large. And so on one hand, there is built-in distribution, which is really important. And so there's that integration component to it. The downside of it is you're dealing with a large prudentially regulated financial institution. And so we will not ever take undue risk. And we obviously have to comply with the rules and regulations of every jurisdiction that we are in. And so whether it's the US or the Fed here in the US or the FCA across the pond or wherever, we have to comply with those regulations, and they look at that globally for us. And so when you start thinking about then, okay, well, if I'm a newer company and I'm trying to get access to that distribution, the things that matter to me are actually some of the boring parts. So number one, to get on board at a place like Northern, you have to go through this wonderful thing called procurement. Well, if you've never gone through procurement for a large bank, buckle up, I owe you a drink, because it's cumbersome and takes months, if not years, quite literally. And that's because our third-party vendor management programs that every single large financial institution has is very robust, complies with federal guidelines and regulations, And if you can't meet those benchmarks, you're never going to get onboarded at a place like Northern. It doesn't matter how much we love you or your product. Your risk profiles, the way you view resiliency and cybersecurity risk, those are the types of questions that, when we start looking like how do we integrate the innovation side to it, become really important. So I think it's some of the more mundane things are the ways to get access to the large distribution that all of our firms have.
Very, very familiar on the procurement side. Thanks, Patrick. And you mentioned different jurisdictions. Obviously, we know that's a key, catalyst right now on where a lot of players are going in general. On the banking side, Lorenzo, you guys are, to my knowledge, the most prominent platform in Italy specifically. You're working with the Bank of Italy in the Milan hub, I believe it is. You're working with Credit Agricole pretty closely. I know you've had other deals on the fixed income side, I believe, over the past couple of years. What are you doing with the Bank of Italy specifically, and kind of how are those inroads being built with BlockInvest?
Yeah, I mean, in the last 2 days, we underline how important it is to talk with the regulator and work with the regulator. Because, we need to be honest. Create a token, it's easy, okay? But to enable something like Mike was describing, the huge part is work on the processes, right? So we started our venture with a precise goal to tokenize the process, not just the product. And with this approach, we follow what was an opportunity for us in Italy. I think many European countries do it the same. And we got selected twice by Bank of Italy for 2 different projects. One in capital market, particularly for what we called mini bonds, so bonds issued by SMEs. And the other one for a very particular underline that I think no one touched it in the tokenization, which is the distressed credit. So we provide also solution for the tokenization of distressed credit, particularly with the real estate collateral. And with the Bank of Italy, we, let's say, co-design, okay, our tokenization platform should work, but for real in production. Particularly for the primary issuance, for also, let's say, design a model for the secondary market without obliging our client to become an MTF. So let's say the only way, as far as we think, to make it happen is let institutional use the blockchain for real. We don't need to give it for granted because it's not. Okay, we've seen a lot of projects that are, let's say, more marketing that real project. But the only way to do that is also provide detailed information to the regulator on what's going on chain. But for what's going on chain, that the asset manager should have his own account and deploy the token. Okay, the custodian needs to have its own account to check all the compliance issues. The fund accounting needs to update the net asset value on a daily basis if you're talking about an open-ended fund, and so on. And also the regulator in our platform has its own account to check what's going on. Because we need to prove them that this technology is not just to make something different, but to help the regulator do his job, even in the easiest and a better way. So, and it was a great thing for us. It was a long story short, apart from Bank of Italy, also our financial regulator, so the CONSOB, so Euro SEC, issued a regulation last year, and today we are the only infrastructure provider enabled in Italy. So we are quite proud of that. But the only way to make it possible again is co-design the processes. It's not only tech. Tech is fundamental part, but the business side and the compliance side should be, primarily highlighted in the tokenization process flows.
Is the Milan hub, is this a sandbox mode, or is this something that's live right now?
It was a sandbox last year, and now it's live. So we have seen a lot of things going on in the last 6 months after this regulation. So just to give you a number, like 80% of our revenue last year were made in December. because all the industry were waiting for this regulation. And now we have launched also for Italian market our new solution, because we started, even if we are Italian, we started in Luxembourg on other use cases, particularly in green bonds and in UK for the tokenization of equity of SPVs for, real estate, particularly commercial real estate. Now we're working with big players, so banks, asset manager, and also another very institutional project that, you will see presented, finger crossed, directly to the ACB next month. So now, let's say it's live, and we just started. As we used to say, one block at a time.
Beautiful. And like, looking at infrastructure, distribution is key. Is there anything you're doing specifically on like with different fund admins or kind of distribution groups on even the placement agent side? Are they also getting plugged into your process, or is that something that's still kind of in the works, would you say?
The only account that doesn't make blockchain transaction is BlockInvest account. So our model, so we are B2B, or as our marketing used to say, we are B2 bank. So are the institution that use the platform, that plug the platform, and directly use the distributed ledger, let's say in an easy way, is not that easy. So it takes time to onboard the clients, but the great thing is they use the new technology, so the distributor makes his own work. They just use the blockchain to make transaction faster and, let's say, safer. But yeah, this is our model. We are not the distributor. We're just your tech guy that can help you to bring your processes again on chain.
So again, integrations are kind of the name of the game, right? Get them through the workflows, get them in the on-chain process with you guys, with other groups. I get it. Makes total sense. Speaking of that, Jason, so from Securrency to DTCC, digital assets, I know at Securrency you had I always thought it was very cool, the compliance-aware token framework. When I joined the industry a few years ago, it was bright-eyed, bushy-tailed, like, oh, okay, cool, you could go to any jurisdiction, rely on this framework to tell you what's right, what's not, get blocked out if you can't get to somewhere. I know it goes way deeper than that, but I think that has a lot of legs. Whether that's right now, in the future, that's something to always keep an eye on. But do you want to just kind of share some of the other segments that DTCC Digital Assets is supporting right now, whether that's the Composer, Ledger Scan, Analytics, the compliance-aware token framework, anything like that?
Yeah, thanks for the opportunity. Appreciate the chance to be here and talk with you folks. So what I want to do actually is talk a little bit about the barriers. We talked a lot over the course of the last couple of days about the opportunities and how things are growing and that sort of thing. What we're thinking about at DTCC DA is what are the barriers to keep us from adopting this technology more broadly and at larger scale? And really there are three primary things. The first thing is data standardization. So when you talked about all the different tokens that are out there, all the different blockchains and all the different technologies that are out there, we need to really figure out how to standardize information across that technology and across those different token standards so that when somebody wants to know what are the money market funds that are available out there in the ethos, they can find them. There's a way to find them. And you need to be able to aggregate that data across blockchain technologies. When you said that the technologies are all different, the way tokens represent information is different. And so being able to collect all that information and normalize all that information, then enrich it with like pricing information or with PII from off-chain sources, that's all things that need to happen in order for us to really understand what's going on in the ecosystem. So data is really key. The second thing is around liquidity. And I use that term really to mean the ability for us to use these tokens to do something. What ends up happening in a lot of the proof of concepts especially, but certainly even in some of the production releases, is you get these tokens and you buy them and now you've got this little pet rock. You really can't do anything with it. And so being able to take that token and use it to pay for dinner or to use it maybe more importantly in something like collateral use cases or as a repo use case, that sort of thing is what's really going to unlock the desire for people to have tokenized assets. It's kind of the supply and demand. You know how to create the demand for these tokens by building applications and use cases that actually demand tokenized assets. That's kind of the second issue. And the third thing is around infrastructure. We talked a little bit a minute ago about JP Morgan Onyx. Yesterday we talked about Coinbase and their ecosystem. We talked about the Benji ecosystem. I think one of the things you heard common throughout all those is the requirement to build your own infrastructure. You had to build your own TA. Securitize built their own TA. So I think what really needs to happen in the industry is we need to figure out what is that common infrastructure that we all need in order to really make this capability take off and grow. And so you talked about the compliance-aware token framework. What that's really about is the ability to embed policy rules that govern the movement of value no matter where it goes and from where it goes. And that's a framework that crosses blockchains, crosses token standards, and gives you the ability to manage that across the entire ecosystem. And so that kind of infrastructure layer that is necessary is going to be something that we need to think about how to create those common components.
Are you seeing, let's say, demand or usage of the compliance-aware token framework?
Yeah,
from your
so
end?
it's really just starting to grow. We talked yesterday, I think, a little bit about interoperability. And so the ability to move a token from one chain to another and then leverage it in an application is an example of a use case that we did with Avalanche and with the Wisdom Tree folks and with Wellington last year that showed how you could take those compliance capabilities, start in one chain, and actually see those compliance capabilities represented on the next chain, and then leverage that token in a collateral management use case where we were actually completely automated the securities lending solution from soup to nuts. Every aspect of it was automated in a smart contract, and the collateral, the token that was created and moved across chains was used as collateral in that securities lending solution. So we're starting to see the use cases come to life and really see how that's going to be beneficial to the ecosystem.
Nice. Yeah, that was a great case to see come through. Something we've been talking about for a while: collateralization of tokenized assets.
Yeah.
Can I steal your thunder
Please,
for your
go
role? Because I actually have a question, because I think this is really fascinating. And we saw this, I think you mentioned obviously JPM. I think most people saw this, but the very first U.S. muni bond that was last week. And what's notable in the offering statements or the issuing documents is the absence of DTCC. And Northern Trust has a lot of strong relationships with a lot of the investment banks, and where there is not an explicit depository requirement, we're seeing some of the large issuers issue these securities or register them on their own TAs or in other models. And so my question is, as you're talking about the DTCC, just even personally for me, how are you thinking about that model? Does DTCC's role shift from this books and records and registered ownership role that it traditionally has and into this more platform role? I mean,
That's a great question. Some people even go so far as to say blockchain could disintermediate DTCC, and I think the reality, in one sense, DTCC is kind of the consensus layer of traditional finance. It's where transactions are settled, cleared and settled, and so you could jump to that conclusion. But I think that the reality is that DTCC's role is more of a governance layer and more of a management of the relationships with regulators and the definition of how things are supposed to be handled in case of stress and that sort of thing. And so I think when you ask the question about what's DTCC's role going to be, so one thing we're looking at is in each one of those ecosystems, these use cases come to life. You've got the Benji token. How does the Benji token interact with the Coinbase ecosystem? And once you cross those boundaries, there's got to be something that stands outside of the blockchain technology to manage the interaction between the blockchain technologies. And that sort of role is where we think DTCC can continue to play. I also wanted to just highlight one aspect there. Earlier this morning, I heard one of the commentators mention industry sandbox. I think one of the things that we need to do as an industry is come together, as opposed to having these kind of siloed use cases and proof of concept activities that expend a lot of money and they prove out some technology, but it's really in isolation. Coming together as an ecosystem, coming together as a complete industry, and to focus on the key pain points in the industry in an industry scale sandbox is, I think, something that's time is due in the U.S.
Very interesting. What type of stuff would you want to see in the sandbox? Like, what if you had to pick the most pressing thing to start working on with, let's say, other panelists on stage, like other collaborators in general? What would that topic be?
Well, I personally think that repo and collateral management is going to be what unlocks tokenization, generally speaking. And I'd like to see how that kind of a solution can be offered across the industry in a way that's really crosses blockchain technologies, crosses token standards, and crosses implementations.
Yeah, and I think rolling that out more generally to other asset classes would also be pretty
Absolutely.
cool. And, we've been talking about that for a while, but really if you can build it out on the repo side with super high quality liquid assets, eventually move to a bit more, move up the risk curve we were talking about yesterday a little. It's fresh in my mind. But to start working other assets in similar just lending capabilities would be tremendous. In general, like what are some of the catalysts? So, Jason, we were talking about barriers to entry, and this is going to be open just for the floor. What are some catalysts that you guys think are impending? Not that you'd want to see just on a broad scale, but what do you think is really in the near term that might help unlock some of what you guys are working on?
I mean, it's easy, at least for us in Europe, a stable coin. We don't have a stable coin like you do in US. The funny thing is that the biggest stablecoin in the world is founded and managed by Italians, but we don't have a stablecoin in Europe, or some sort of central bank digital currency that can be represented on chain. I mean, just speaking about numbers, we are working on a huge project on an open-ended fund tokenization, and we have reduced the timing of subscription from T+4 to T+2, T+1 in the night. But I mean, let's say with a fund accounting that is equipped to give the net asset value the soonest, and a cash on chain, you can even reduce this timing. And we were talking about the settlement time on the great Benji project, but I know that we just started, but think about it, that one of the parameters of the GDP is the velocity of the money. If you're able to increase the velocity of the money, potentially we can increase the GDP. Okay, so I mean, this is, I think, the most important stuff. And
well, that's good. I mean, yesterday we were talking with Galaxy about their euro-denominated stablecoins. There could be some legs and some motion on that front for you guys. Mike, anything that you would want to see in the impending, or just in the near term?
This is more like a philosophical comment than like a specific utility, but I don't know how to say this nicely, but I think people need to be more authentic in the way that they approach the space and more genuine in it. I think, I mean, you can tell from the blockchains I mentioned earlier how we feel about the public versus private debate. Well, whatever, you can tell from that. I think, like Benji, for example, is not a mirrored asset. It is authentically on-chain. You authentically own that asset on-chain. We don't run parallel books off-chain and mirror them on-chain. Like it's authentic. And I think there's a lot of like large products that compete with ours that are not. And I think currently maybe that's not such a big deal because people are just excited that there's other players in the space. But I think as time goes on, I think that authenticity is going to matter. It's going to be of the utmost importance. I think about, like we get asked a lot about, because we're in kind of an innovative group at our firm, so we get asked about AI like all the time. And I think that the intersection of blockchain and AI is really going to come in that authenticity layer, where the authenticity is coded at origination. It's hard coded into the asset at origination. You think about like deepfake technology and all that kind of stuff, where authenticity is coded in at origination. So I think doing things authentically on-chain are going to matter. We've noticed, can I plug something else? We have a Twitter account, FTI_DA. It's our digital asset Twitter account. It's not run by an outside department. It's not run by people who are putting fluff up there. It's actually run by us. We run it in the digital asset account, which some salespeople thought we were hacked at one point because we were posting some really interesting crypto-related stuff up there. But we post research on all of this regularly. We posted a piece yesterday, I think it was yesterday, on Base. We posted something last week on Solana. We've posted things in the past on, our very first post, which was a few months ago, was on the halving before that became kind of the topic du jour. And so we're authentically in it. And what we found is that our competitors are very quickly becoming our collaborators. And the ones that are more authentic in the space are the ones that are kind of more aligned with, I think, the ethos of blockchain.
Yeah, I 100% agree. I think when we think about bringing all of this values, I think, the numbers range from, something like 10 trillion to $16 trillion worth of value on chain by 2030, depending on who you listen to. I think we have to start focusing on the things that are really going to matter. Things like quantum attacks. What happens if somebody develops a quantum computer that can actually decrypt a blockchain? Right? How do you handle those sorts of scenarios? And so I think we need to really, as an industry, focus on the things that matter.
And I'll add, so I want to piggyback off of the regulatory and compliance issue, and I think as the U.S. goes, so does the rest of the world in terms of adoption. Things like SAB 121, which the House of Representatives, recently passed a proposed bill to pull that back. Support that. I would recommend that. But those sorts of things are huge catalysts for the large financial institutions to really get into this space. So regulation's one. The other one that, beyond sort of the product and technology innovations, I think is kind of twofold. Number one is the demand side, and we actually have to start delivering real tangible value to A, our firms, but B, more importantly, our clients. Our clients don't really care about the technology. When I sit in front of a large pension fund or one of the largest asset managers, the Franklins of the world, they don't really care if it's blockchain or not. They care about, what does it do for me? Do I generate additional yield? Does it provide expense savings? What are the unit economics? And we've not, as an industry yet, nailed this. And so we really, my tagline for this is, we've been in the business of innovation, but we really need to fight to turn this innovation into a business. And that's important to our executives. At the end of the day, we're all publicly traded companies. The bottom line really matters, and so we have to move beyond this POC, the hype, hey, we're just building things, but we need to really create commercial value for our firms and for the investors, and I think figuring that out will be a huge catalyst.
I think it's hard because a lot of the stuff we're talking about is ops, and it's like not the most exciting thing in the world to talk about or think about or anything like that. We got lucky. Our CEO used to run ops for the firm, so as soon as we started talking about blockchain years ago, she got it immediately, but it's really hard. And just piggybacking off your comment on regulators, your comment on regulators as well, we found the regulators to actually be, interested, engaged. They want to learn more. They see the benefit right away. So there's this weird thing in our space where there's a whole cohort of people who really want to act as, I don't know, like anarchists, or they're
activists.
Yeah, which is one tactic. Another one, which we've been able to kind of thread the needle on, is partnering with the regulators in terms of being like education, like this. It's this collaborative effort, and it really feels like that's been a kind of the key to our success so far, has been engaging actively with the regulators instead of just trying to build something and hope that they say it's okay. We work with them together.
But let me add something, because Mike said the word private blockchain, something that I don't know what it is, apart from joking. I couldn't agree more. So remarketing a database, okay, let's use the database, probably is cheaper and even safer. The fact that most of the use case till now were just digital twin, I mean, we call it gadget. So you're in the marketing budget of the company, okay? If you issue a native token on chain, means that the token exists only on the blockchain. I mean, first of all, talking again about compliance, you oblige yourself to, in the prospectus, declare that the token exists just in the public ledger, and you oblige yourself to follow the whole process on chain. And this, I mean, I think can bring another value in the long term. The thing is, most of the time, I mean, the improvement also at the process level are not tangible with just one fund tokenized, okay? It could be, they're great, but I mean, the great value will be when everyone will tokenize his asset, and we will be able to bring the value on chain together and without the need to create the Chinese wall. Because this is the risk. I totally agree with that. So we need to use the blockchain as a common layer, as a settlement layer, because it was born with that. I mean, Bitcoin was created exactly for that. I mean, to exchange value and trust. And this is what we need to do. It's a long path. We need to work with different regulators all over the world, because my regulator works differently from yours. But the only things that we have in common is the layer, is the blockchain. So the only way is to use the pure public blockchain. And yeah, we will make it.
You guys are on the money. Front ran my question about digitally native versus digital twins, so I like it. We're all thinking the same way as we're going. Listen, we're coming up on time, but I want to give a chance for kind of parting thoughts, if you will. Just any final takeaways for the crowd, Jason, if you want to.
Yeah, just to reiterate my comments about collateral, I think that's the reason why I think I'm so interested in those types of use cases that really drive a specific value. You can actually you can do math and figure out what the value is going to be of getting an extra hour out of your access to cash. And so I think those types of use cases are the ones we really need to drive.
I think that the point about end user benefit is really well taken. There has to be a benefit to everyone. It can't just be, you're running something and you save a bunch of money and then you keep it all to yourself. Again, away from the ethos of blockchain, there really has to be a benefit to the end consumer for a lot of this stuff to be adopted. And again, we're super excited for the future around all of that.
I mean, this is a great moment, I think. I'm optimistic for what I'm seeing, even if, again, we have this constraint of the cash lag. What we see, working with several financial institutions, is that apparently competitors want to work together. So what is missing and can be created a real capital market union, but not, with let's say, listed product. The title today was Wall Street on Chain. Probably, listed things can be there. But if you work on assets that work to tokenize, and we work together, and we build an ecosystem of standards, I think that, the benefit would be for everyone, particularly for the private retail investor that till now were excluded from this kind of asset classes.
And then just quickly, from my view, I think it's, and maybe you could say this every year, but I think it's the most critical point that, at least in the 5 years I've been in the space, it's the most critical moment for digital asset and blockchain adoption that I have seen. We survived, obviously, the crypto winter, but I think at some point we run out of, no pun intended, chain or leash, if you will, to continue this work. And so I think it becomes really important right now to prove why this is valuable for the marketplace. I see a lot of teams starting to dissolve, groups shifting resources. I think executives sort of now really questioning, hey, this was fun and cool, but we're on the AI thing now, and where is blockchain in this? And so I just think it's really, really important for us to kind of put up or shut up, if you will. I tell my kids all the time, don't talk about it, be about it. I really feel like we're in that moment, and we have to seize that.
Love it. Well, amazing remarks, guys. Really appreciate the time, gentlemen. Everyone, this was Digital Asset Infrastructure. Let's hear it for the panelists. The audience was all great. We got another session coming up right after this.